The third Bitcoin halving event, which will see the reward for each newly mined block reduced to just 6.25 BX, is now less than 100 days away. Historically, Bitcoin has witnessed striking growth in the months surrounding earlier block reward halving events and has already gained more than 32% in the last month. Likewise, according to the prominent trader and technical analyst Rect Capital, Bitcoin rallied % and %, respectively, as a result of its first and second halving events. As such, if Bitcoin achieves similar performance a third time, it could achieve a value between $and $. In the near future, should history repeats itself once more, anybody purchasing Bitcoin at its current price of $, could be due to turn a serious profit. With that in mind, let us examine 3 ways to gain exposure to Bitcoin prior to the halving. Along with Bitcoin futures. In brief, futures are a type of financial contract known as a derivative. In the case of Bitcoin futures, these contracts track the market value of Bitcoin and allow buyers and sellers to agree on a price and date to later execute a trade with one another, regardless of what the current spot value of Bitcoin is at the time. Because of this, if you think Bitcoin is currently undervalued and is likely to rise in the future, then futures contracts can potentially allow you to buy Bitcoin at lower than the market rate on the expiration date. For example, if Bitcoin increases by 30% by the time the contract expires, you will still be sold BX at the rate specified on the futures contract. Image courtesy of StormGain. Although this might sound complicated, modern Bitcoin futures exchanges have made the process practically foolproof by automatically settling trades in stable coins of the underlying cryptocurrency, in this case, Bitcoin. Among these exchanges, StormGain arguably offers the most complete experience, since it allows users to go long on Bitcoin with up to 150x leverage. This essentially means traders can multiply their profits by up to 150x, ensuring that even traders with a small amount of capital can quickly rack up some Bitcoin before the halving event. Dollar cost average your way in. Although it can be tempting to simply invest a large lump sum in Bitcoin before holding for the medium to long term, doing so can expose you to Bitcoin's notorious volatility. I can describe volatility as how much the value of an asset changes over a given time. A volatility index. More. Instead, if you gradually invest regular sums into Bitcoin, you can avoid the risk of unwittingly investing a large sum when Bitcoin is at a price peak, thereby making it more difficult to see a positive return in investment. As such, making regular investments in Bitcoin allows you to average out your entry price, helping you avoid accidentally buying the top. Image courtesy of TCATS. According to the Bitcoin education platform Look Into Bitcoin, the market-leading cryptocurrency was valued lower than it is today for 94.3% of its lifetime. This means, for Bitcoin investments made regularly throughout this time, just over 5% would result in a loss, whereas almost 95% of your investments would be profitable. To help visualize the benefits of dollar cost averaging Bitcoin investments, TCATS can be used to estimate how much profit you would be in had you invested. You can read full post on CryptoFans News, link available in text below.